Currently, as I'm filming this video on this late Monday afternoon, the 10-year yield is at 1.64%. Earlier, Goldman Sachs came out and lowered their growth forecast to 1.8%, lowering it 20 basis points from the original forecast. We're witnessing the farmers in the Midwest getting annihilated, going bankrupt. We're looking at farming equipment, like companies like John Deere, having massive trouble. We're looking at freight companies, massive trouble. We're looking at the auto industry, massive trouble. We're looking at our debt and deficits skyrocketing here in America right now. Yet there's people that write me and tell me that the economy is good. Even when last week the Dow Jones lost 765 points in one day. They call it just a speed bump. Dow Jones lost another 391 points today. Yet people out there live in this illusion. They live in this bubble. They live in denial, pretending everything is okay. Wake up. Stop living your life in fear and face the facts and prepare. This is not going to be stopped. This is just the beginning. It's Monday, August 12th, 2019. There is so much going on. I'm going to get right into it. Dow Jones down 391 points today. More fear on what's going on over in Hong Kong. Good article today on CNBC. Cramer, Hong Kong protests more serious than U.S.-China war for global markets. You know, if the Chinese come in and shut down Hong Kong, the airport there is now shut down. They're going to try and reopen it in the next couple hours, I believe. If you shut down Hong Kong, if China goes in there and shuts it down, it is going to cause a worldwide recession. It is going to trigger this recession. We are in the beginning of a global recession right now, but this will trigger it. It will accelerate it because this is a major financial hub in Asia. So we'll keep an eye on that, see what continues to happen over in Hong Kong. Many more now are predicting a half-point rate cut in September. Yet people continue to try and promote this theory that things are good with the economy, that things are good in the market. First off, what you have to understand is the markets are completely disconnected from reality. The markets are an illusion. The markets have been injected with liquidity. They're artificial, they're fake, they're rigged, they're manipulated. And the sooner you realize that, the sooner you're going to protect yourself, because what's happening on Main Street is appalling. It is deteriorating. It's eroding. The economy is just disastrous. But these people keep telling us that since the stock market is good, the economy must be good. And that's the farthest thing from the truth. So I think we have to really wake up to the fact that Main Street and Wall Street are completely separate, that the stock market is a complete illusion, completely detached from reality. And most Americans are not invested in the stock market to begin with. But this is another article that came out today. I believe this was on CNBC. Wall Street sees even more Fed rate cuts ahead, with Morgan Stanley predicting a return to zero. So now we have a more of a chance of seeing a half-point cut in September than we had earlier. I still am going to stick with a quarter point, but if we continue to have days like this on the Dow Jones, if we can continue to see hostilities over in Hong Kong, China blaming the U.S. now for encouraging this hostility and getting our nose involved with Hong Kong, we could possibly see a half-point cut in September. So a lot happening. So while all this is going on, we still have people here in the U.S. that are spending money like there's no tomorrow. They are spending heavy. They're spending recklessly. We're seeing we're seeing a decent uptick in bankruptcies. This year, it is predicted that we will see near 800,000 bankruptcies in the US. More consumers nationwide are falling behind on their payments because people continue to live beyond their means. Many people, not all. People have emergencies, they have medical emergencies, they have car emergencies, and they have emergencies, and they land up falling behind the 8 ball and they can't get out. And now they have to take a loan or run up their credit cards to get the car fixed, to, take their kid to urgent care, and there's $500, and now they start falling behind, farther behind, farther behind. But there's still people out there trying to keep up with the Joneses. People going out there leasing cars and buying cars they can't afford, buying jewelry they can't afford. People walk into jewelry stores and they actually finance jewelry. They walk in and finance watches. I mean, if you're going into a jewelry store and you have to finance a watch, you are a moron. Don't be one of these people. The worst thing you could possibly do right now with this slowdown, this isn't just a US slowdown, this is a global slowdown. We are in a currency and trade war all at the same time. The last thing you want to be doing is taking on debt. This is no time to be gambling, taking risk, or taking on debt. And the last thing you want to be doing is financing jewelry or leasing a car or buying a car that you cannot afford. Why do people get in this narcissistic mindset that they have to drive something to impress people that they don't even know? Taking on up to 8 years of car payments to drive a car is absolutely absurd. People taking on subprime loans now to buy a car to impress people. This is the time to be smart. But most people won't be. They're going to continue to keep running up debt. They're going to keep using those credit cards. They're going to keep pretending to be somebody they're not. Here's an article on Zero Hedge. U.S. credit card interest rates are at the highest level in 25 years. Average rate on interest-bearing card accounts topped 17% in May, according to Fed data, the highest in 25 years that the central bank has been making the calculation. The article goes on. The spread between the Fed funds rate and the rate the card issues to pay to hold deposits is at just under 15%. It's only been wider once, and that was the third quarter of 2009. And these credit card companies, they're thieves. They're ripping you off. They're hitting people with all kind of charges, annual fees, foreign transactions, balance transfers. There is a record right now. I mean, listen to this. There's a record $850 billion in U.S. credit card debt that is outstanding, according to the Fed. And it just makes me think, what is going to happen when this economy really slows down? I mean, think about these people, again, who promote this economy saying it's great, it's good. They continue to have this almost agenda to write down in the comments. There's a very small percentage of people that do this, but there's a small group of people that just seem to have an agenda to tell us that this economy is doing well. In a good economy, you shouldn't have near $1 trillion of outstanding credit card debt. You shouldn't have 7 million people that are 90 days plus delinquent on auto loans. You shouldn't have $1.5 trillion in student loan debt and people defaulting every day. It's just absolutely absurd with what we're seeing transpire. And it gets worse. Deficit right now is at $867 billion. That's a 27% increase from last year. This is in the Wall Street Journal today. So most of this is going to be from the Wall Street Journal or Zero Hedge. And I can't stress this enough. Don't listen to me. Do your own homework. Do your own due diligence. Take a look at this and read this for yourself. I'm not making this up. This is on the Wall Street Journal right here. Came out yesterday. Federal receipts rose 3% from October to July, totaling $2.9 trillion, but outlays climbed 8% to $3.7 trillion. The Treasury will borrow another $1 trillion to cover this gap. More is going out than coming in. And, I'm not a rocket scientist, but that just tells you when you have more money going out than coming in, you're running a deficit, you're going broke, and how long could your household go on living, paying the bills, eating, putting shoes on your kids' feet, keeping the lights turned on if you were spending more money than you were making? And so we will print more money, like most people will just use more credit cards, but at some point it's all going to come to an end. Reuters, about a half dozen stores across the Midwest say sales have collapsed. One store in Geneseo, Illinois, saw sales crash 50% in the first half of 2019. These are tractor stores like John Deere. Again, we're in a trade war with China. We've had major weather conditions that flooded out a lot of the Midwest, and these farmers are in big trouble. We should all really say a prayer, but I'm sure that we're going to land up probably bailing out a lot of them. But at the moment, a lot of them are going bankrupt, having big financial trouble. And we also are going to pay a price because, if we have to bail out the farmers, who do you think is going to pay for it? We are. And we're seeing higher prices in the stores right now. And we're seeing a lot of shortages in canned goods and canned vegetables across the country. Tractor sales are collapsing. This is also on Zero Hedge. Very interesting. They say there's no inflation. This is on Zero Hedge. Inflation is showing up at the worst place possible for consumers. And where's that? That's at Walmart. And we're always told, all these business analysts that I watch on television always say that inflation, there is basically no inflation. Consumer goods are up 2.3% in the first 6 months of 2019. A shopping trip cost 5.2% more in June than it did a year ago at Walmart. Another 10% is going to be added on the 300 billion with China. That another 10% will be added next month. So get ready to see even further costs. But look, I'm not opposed to this trade war. China has been ripping us off. They've been stealing technology from us. They've been ripping us off by about $500 billion a year. And, it wasn't that long ago when half of China didn't even have electricity. Now they have the biggest military in the world. They have the biggest bank in the world. They are a economic powerhouse. And now we're going to have to deal with this mess. And if we do not stand up to China right now, in my opinion, if we just go, okay, we're just going to go back to our old ways, you can keep ripping us off. We'll keep running these huge deficits, and you can keep stealing our technology. I believe that's going to be very negative for America. And I know that it's not fun being in a trade war. I know prices go up. I know people are paying a price. There's a lot of suffering going on, like we're seeing with the farmers. But, you cannot blame this on this president right now. This was allowed to transpire over decades with China, and now somebody's finally standing up to them. So we're going to see how it all plays out. But I think it's going to get much uglier. When you have $15 trillion of government debt globally with negative yields, this is a major red flag, warning sign telling you that a major recession is coming. In fact, we just added another 700 billion to that number just last week. And it's funny that people used to laugh when you would say negative yields, negative interest rates. They're not laughing now. Article on the Wall Street Journal a couple of days ago. In this article, it says that they believe U.S. yields could fall faster than previously expected. We are watching central banks around the world cut interest rates in an effort to stay ahead of the Fed and support the economies by weakening their currencies. This could push the Fed to cut rates faster. This would give the central bank less room to reduce rates if the U.S. entered a recession. This will force negative rates as an alternative form of stimulus. And just think about it. We have 200 basis points left. The Fed has massive debt on its books, on its balance sheet, and they are really in a corner. And these are really concerning times that are going to affect every one of us. Speaking of negative rates, Scandinavia now, the banks in Scandinavia now have sub-zero rates. This is considered normal. Another reason why you should be your own bank, your own central bank. They're telling people that they need to charge you to lend them your money. They're going to charge you to deposit your money in their bank. They're doing this because they need this for stability. I would do everything possible not to deal with banks. If I'm dealing with a bank, I would deal with a local small bank. Switzerland, UBS Group AG is charging wealth clients on deposits exceeding 500,000 euros. They're also charging negative rates for clients holding large balances of 1 million euros or more. Again, do everything you can to avoid dealing with banks. And remember, people out there that are holding assets, maybe their gold, silver, jewelry, cash in safety deposit boxes, buyer beware. These are some of the most unsafe places you could be holding your assets, your valuables. If you have a safety deposit box, I advise you to get a very good safe, keep it in your home. There are so many reports of these banks robbing these boxes, losing these safety deposit boxes. That was also on the Wall Street Journal about a month ago. You can pull that up, research that. The banks are the unsafest place I think you can be putting your assets or putting your money in general, because think about it, you can't even cash a check for $5,000 at your bank because they don't have the cash there. It's gone. So if you need that cash, if you need that safety deposit box, are you going to be able to get it? Think about that. Be your own central bank. Here's another one on Zero Hedge. Everything has changed. Gold is at an all-time high in 73 countries. Gold, all-time high in 73 countries. Currency wars, debt, and money printing are only going to strengthen gold. There was an article that came out a few days ago on Zero Hedge, and they had interviewed Bill Murphy. And he's a good friend of Ray Dalio's. Ray Dalio, who manages one of the biggest hedge funds in the world. Bill Murphy is head of the Gold Antitrust Action Committee. He says gold will take out $1,900 and it will start heading to $3,000. You will see panic in gold and silver supply. This is why I cannot stress enough that you need to be buying at least one of these undervalued assets immediately. Silver is the bargain of a lifetime, he says. It is the cheapest asset on the planet. That's Bill Murphy. If they don't keep printing money, and this is what he says, if they don't keep printing money and keeping interest rates low, it's gonna cause chaos. I think gold and silver are headed to the moon. You're going to get these crashes out of nowhere because all of a sudden it's like going into a black hole. That can happen, and this is what people need to be concerned about. That's Bill Murphy, Ray Dalio's friend, and I believe that 100%. And look, I made an order last week of metal, and I will be making another order this week because especially silver, it is absolutely, he's right, it is the cheapest asset on the planet right here. And there's no reason why somebody cannot come up with $17 to buy an ounce of silver, probably, you know, $1 or $2 over spot, and you've got yourself a real asset right here. So if there's any word of advice I can give today, I'm not a financial planner or advisor, as you know, but this is what I'm doing, and I believe it's what the smart money is doing. So I'm going to wrap this video up today. Before I go, I want to make a couple brief points. We saw the market get clobbered again today, and I don't believe it's all just Hong Kong. I don't believe it's all the China trade negotiations, Brexit. You know, it's literally, I think we could probably say that we're seeing major market volatility for many, many reasons. But I think at the end of the day, the main reason that we're seeing volatility, and the main reason we're going to continue to see volatility is the reason that this is all going to crash, and it's debt. It's the massive global debt. We're looking at what, $250 trillion of global debt. We're looking at $22.5 trillion of US debt right here, not including unfunded liabilities. So at the end of the day, there's a lot going on around the world, the trade war, the issues in Hong Kong, Brexit, and just, you know, chaos across the world. But I believe that the biggest concern for America and the issue that is going to bring the economy down to its knees, that is going to rock America, is the debt. If we didn't have this kind of debt, it wouldn't really matter what was going on around the world. But we have so much debt here, and servicing this debt is unsustainable. And the debt and deficits continue to skyrocket. There was just too much debt, and the debt is growing too fast. And this is going to be the cause of the collapse. And I think we should all really be honest of what really is going to cause it. It's going to be our spending right here, our debt, our deficits, our out of control lifestyle that these politicians have led us into, this global economy, writing checks that they cannot cash. And America's been living on a credit card for decades. America is not manufacturing anything. It's not producing anything other than consumption and debt. I want to close with this. Too many people believe things are okay because they watch the stock market. Watch the bond market. The bond market is literally screaming and nobody is listening. 1.64 as I make this video right now. It is screaming. Nobody's listening. If we start seeing a real uptick in unemployment on top of what we're seeing in the bond market, we've got an inverted yield curve. When the 2 and the 10, they're a thread apart. We're seeing devastation across the board, whether it be freight, shipping, manufacturing, the auto industry, retail, real estate, commercial, you name it. But we haven't seen a real uptick in unemployment yet because everybody's an Uber driver or Lyft driver, and now they're getting into trouble. But when we start, I think, seeing a substantial uptick in unemployment, we're going to see massive, massive trouble. But we've got Deutsche Bank out there. We've got black swans out there. Anything could happen tonight. Something could happen tomorrow, next month, next week, next year. You don't know the day, the time. All we do know, it's not a matter of if, it is a matter of when. Now, again, I believe that you've got to be in some hard assets. I pretty much shop now. Most of my purchases are SD Bullion, link down below. I've gotten a couple comments in the last couple of days about recommendations. SD Bullion, link down below. They've been fantastic. I just made another order with them last week, and I'm going to be making another one at the end of this week because I think this stuff is literally on sale. I don't work for anybody. I don't sell anything for anybody. I buy this stuff for my own personal security. And if you go to your local pawn shop, coin dealer, wherever, it doesn't matter. It doesn't matter if you buy it or not. I'm just explaining to you what I'm doing and where I think the place to be, the safe place to be is. And that's insuring yourself with real assets, not paper. But I don't care where somebody gets it. I'm not here to sell you anything. I'm not here to tell you what to do. You have to make that decision yourself. But I believe that you need to at least have some exposure to gold or silver or both, because I think it's going to be really the only thing other than security and preps that are going to protect you. And I believe that the stuff is on absolute sale right now. And I think a lot of people are going to look back and they're going to laugh at where the prices are right now to where they are down the road. And, you know, we saw gold's up right now. Silver is up right now. They've been doing very, very well. But, you know, we can see silver going up 10 or 20 cents and, you know, gold going up 10 or $20, and that's great. They're going up and they've done well. But nothing's going to really happen until we see a full-blown collapse, a full-blown recession, or a full-blown depression take place, something really cataclysmic happening. Then you're going to see massive moves in these metals market. Yes, it's nice to see 10 and 20 cents a day here and there and 10 or $20. That's great. But this stuff, when you buy it, what I do, I buy it, I put it away, I don't even think about it, I forget about it. I don't care what it goes up or what it goes down in a day. It is there for an emergency, because when this whole system, this whole Ponzi scheme collapses, you're going to see the metals go to the moon. You're going to see these things go up every day. There's going to be panic, and there's very, very little supply. And the big money is going to come in, and it's all going to be gone. So if you want to be holding hard assets right now while they're on sale, I believe this is the time to be getting into them. And I believe another great asset is going to be security, training, security, accumulating a lot of brass, because if you can't protect this stuff, it's worthless. If you can't protect yourself, it's worthless. So, make sure security, number one, of course, food and water and all those things in between. But you can't go into this recession or depression thinking that all you need is a can of beans, water, and security. You've got to have some financial security too, because you want to prosper through this, you want to get through this, and you certainly want to prosper when the dust settles and we get back to monetary stability. And I see that we quite possibly will be seeing the metals backing the dollar or backing some currency here in America. I believe we're going to come to a point where the world is going to lose faith in the US dollar. It's going to lose faith in paper fiat currencies. And the only thing that's going to matter is metal. And if you don't have any, you're going to be in trouble.